Legal disclaimer. Nothing in this video is financial advice. Always do your own research or consult a qualified financial advisor before making any investment decisions.
Where will the next 10x, 100x opportunity be? This is what investors are always looking for. I mean, where does the opportunity to multiply your invested money by 10 or 100 lie? Today, I'll explain how you can find these kinds of investment opportunities in tech stocks. Recently, my investments have been heavily weighted in AI. We've already made serious gains in Nvidia, AMD, and Palantir, PLTR. But now, we are looking ahead to the upcoming games, and I see new theses emerging in artificial intelligence. In this context, I have created an AI Investment Manifesto. I will explain this manifesto to you. It consists of 5 structural trends. I believe those who understand these structural trends first, find the right companies here, and invest, will be in completely different places 5 years from now. My claim is this, and I've been saying this for a long time: the AI era hasn't even fully started yet, but the winners seem to be slowly emerging, and they are shaping up around 5 themes. 1. The semiconductor shortage. 2. Network architecture, a completely new field. 3. Energy. 4. Inference. 5. Photonics. 1. The semiconductor shortage. My first thesis is that there is a shortage of semiconductors. There is a very real bottleneck here. I mean, the world is currently very focused on energy and geopolitics, but the real, massive shortage is happening in almost every product related to AI. For example, there's a problem on the memory side. There's a problem with AI packaging capacities. There are problems in power management circuits. There is a shortage of high-quality CPUs and system chips. Not just GPUs, but CPUs too, meaning classic processors, are facing shortages. And the demand is increasing exponentially, not linearly. In contrast, supply is only increasing linearly. Because to produce these, factories, infrastructures, and facilities need to be built. On top of that, the war complicates all these operations because there can also be issues in the flow of raw materials. How do we know about this shift? It's very concrete. We can see it. As you know, the fundamental fuel of AI is tokens. There is an incredible increase in token usage. Yet, only a very small part of the world is actually using AI right now. For example, when we look at OpenAI, there is a 150% increase in tokens in the last 6 months. More AI means a need for more semiconductor capacity. GPUs are being rented, as you know. Their prices have gone up. For Blackwell chips, the hourly usage rate has gone from $2.75 to $4.08. Very concrete. I've mentioned these before, so I'm moving quickly. Anthropic, which is currently the most ambitious player in AI and the creator of Claude, saw its run rate revenue, meaning the projected revenue for the next year, jump from $9 million to $30 million in just 4 months. This is an unprecedented situation in history. There are shortages in 4 different layers here. Products literally cannot be found right now. HBM memory, just look at how much the value of Samsung, Micron, and SK Hynix has increased over the last year. CPUs and system chips, we were always focused on GPUs, but now CPUs are gaining importance too. They especially come to the forefront in agentic AI. There's a serious increase in AI server-grade CPUs like Grace. TSMC's production capacity in this regard is limited. Because of this, Intel is seeing a massive windfall these days. Because Intel can produce CPUs. Advanced packaging, CoWoS, meaning bringing all these GPUs, HBMs, and CPUs together, forming racks, etc. There is a severe capacity shortage here too. TSMC is operating almost like a monopoly here. It has doubled its capacity, but it's still not enough. Power management units, we have now moved to 800-watt racks. Meaning, the total energy consumption in AI previously was way below this. Right here, brand new companies are starting to step in. As I explained in a previous presentation, if you remember, Elon Musk says that just the future of his companies requires 1 TW of AI capacity. Currently, the world's total production capacity is around 20 gigawatts. There is a 50x difference here. 2. Network architecture. Now there are new topics. The first of these is network architecture. Network architecture will change drastically with the new Nvidia Rubin infrastructure. Blackwell and Blackwell Ultra are rapidly growing infrastructures right now. Coming from Nvidia, these used to be network problems. With Rubin, the issue is now turning into a bandwidth problem. What does this mean? It means the internal capacity of each individual GPU doesn't matter as much anymore. How do they communicate with each other? How do GPU racks and entire data centers establish communication among themselves? This looks like the second biggest field. Just looking at Nvidia alone, its networking revenue increased by 162% in the last year. You know they sell various products here. I mean, they've made incredible money just from the connections between their own GPUs, CPUs, and memory. New technologies for this are growing very fast. In the last quarter, they achieved $8.2 billion in revenue. This is a 13% increase compared to the previous quarter. So the acceleration continues. But Nvidia isn't the only player here. 75% of customers use Nvidia's end-to-end solutions. About 25% are open to other network players. In the Blackwell NVL72/36 systems used today, 5 to 9 times more network components are required to operate as a single node, meaning for one GPU node to work. This is very concrete math, guys. So what does this mean? They are going to buy more network components. They might buy 75% from Nvidia, but they'll go elsewhere for the remaining 25%. Copper won't be abandoned here. They will continue to use copper cables, but at the same time, the optical side will grow. We will go into more detail about this. In the current system, combining many GPUs into a single node, ultra-dense low-latency NVLink fabric, 130 terabytes per second bandwidth, 18 NVLink switch racks, these are what's being discussed, and copper is still king in these. But in the new era, these are changing completely. With Vera Rubin, meaning Nvidia's new AI solutions infrastructure, Vera Rubin and Rubin Ultra, these will completely change. It will move from 400 gigabytes to 800 gigabytes, even 1.6 terabytes. We will reach 260 terabytes per second total bandwidth. This is double what we have today. And the NVL576 Kyber will need faster interconnects. Meaning we are moving towards optics. There's a concept here. It's called the optical switch. It's called CPO, co-packaged optics. What does CPO mean? Integrating the optical module right next to the network chip. So, on one hand, you have copper. On the other hand, you need an optical chip. What does that optical chip do? It enables data transitions between the copper and optical infrastructures. Let's put it that way. There is a serious shortage on this side too. This is a fairly technical slide. Let me not drown you in too much detail, but while GPU to GPU connections used to be very important, now CPU to GPU transitions are important. On top of that, the connections between links running over light and classic electrons flowing over copper are becoming crucial. 3. Energy. The third major trend is that AI requires massive amounts of energy. There is a very serious, massive bottleneck here. For many companies now, GPU procurement isn't the main problem. The problem is being able to connect the electricity to the grid in time to feed that GPU. Let me give you some data on how much the need has increased. With H200 chips, the previous generation chips, they consumed around 70 kilowatts of electricity per rack. A house uses roughly 1 or 2 kilowatts of electricity a year. So, one rack was consuming 35 times more energy than 2 houses. With the GB200 NVL72S, this goes up to 120 kilowatts. It looks like it will go up to 140 kilowatts in GB300S, 200 kilowatts in Vera Rubin, and up to 600 kilowatts in Rubin Ultras. You see a terrifying increase here. GPU systems and racks need much more energy now. And there is another incredibly striking piece of information here. 70% of existing data centers were built for 4 to 9 kilowatts racks. Now, those are insufficient. I mean, only 2% of the racks in existing data centers can handle 50 kilowatts and above. We can safely say all of them have become inadequate. On the other hand, the US and China are clashing very seriously over this. As you know, the US has the strongest design companies and software culture regarding AI. Nvidia is way ahead in this, AMD is way ahead in this. Right now, Claude has made incredible progress on the software side. But the Chinese have an advantage too: energy. Currently, the reserve energy margin on the grid in the US is around 15%. China, on the other hand, has built so much energy infrastructure that they have the power to produce and distribute almost twice the energy consumed. Because of this, there is a massive shortage in the US. Right now, data centers are waiting between 3 and 7 years to connect to the main electrical grid. Other solutions, for example, the solution called behind-the-meter retail tariffs, don't apply here. Use source power directly. Meaning, an AI data center and a power producer in that region work together. There is a process of a few months to 1 year here. New natural gas turbines can also take up to a year. There are new technologies. For example, the technology Bloom Energy is involved in. I am an investor in that, by the way. They can provide solutions for energy needs in about 3 months. And Bitcoin miners, as you know, are retrofitting themselves. Players like IREN and others previously invested heavily in energy infrastructures. But nowadays, since they can't make money from Bitcoin mining, they are rapidly pivoting to AI data centers. They are a bit more advantaged, but even for them, the process can take from a few weeks to a year. Adding every 1 gigawatt of capacity requires spending between $30 billion and $38 billion. Meaning, trillions of dollars will be spent on these things in the coming years. Those who find the right companies on this side will make big money. 4. Inference. The fourth topic, the AI boom hasn't even started yet. I mean, up until now, we've mostly been training AI models. This training was like the R&D phase of the job. Let's put it that way. OpenAI, which started this first, is currently falling quite behind. Why? Because Claude is focused on inference. Meaning, they are focused on the outputs that are the most accurate, the most useful to us, that increase our productivity the most, and make us take the best shots. And statistics show us that output consumes far more tokens. During the R&D phase, meaning the training phase of large language models, there were very high compute costs. Because of that, revenues, meaning ROIs, return on investment, were quite low. GPUs were under heavy load, and hypermassive investments needed to be made. If you remember, the CEO of OpenAI was talking about trillions of dollars at one point. Now, things have changed. Money is actually starting to be made. I mean, the bottleneck is now shifting towards memory capacity and bandwidth. Because inference relies on memory capacity and bandwidth rather than raw GPU capacity. This is one of the reasons for the incredible surges in Micron and SanDisk. There's HBM, LPDDR, and new memory architectures. So, the time has come for big tech and enterprises developing the right software in this regard to make money. The business is shifting from OpenAI, which develops large language models, towards those who can actually get output from them. Claude plays a very serious role here too. Because Claude is both a successful large language model and can turn this into outputs very quickly. 5. Photonics. And the fifth major trend is the photonic trend. There is a huge opportunity here. Because as network architectures become more complex, as inference becomes more important, copper-based infrastructures are no longer enough. Photonics is taking its place here. Silicon photonics and CPOs are stepping in, and the growth has reflected in the numbers. There is nearly a 12x growth in these optical modules, meaning the technologies carrying AI to optics, between 2025 and 2026. This has seriously benefited many companies in our portfolio. Nvidia invested close to $4 billion in this area. They invested in Coherent, they invested in Lumentum. Indirectly, Marvell is related to this, they invested in Marvell, and market shares are rapidly increasing. All of these are the triggers of this growth. I don't want to drown you in too much tech, but the important thing is this: it's not just copper anymore, optics is growing too. And there are incredible increases in the valuations of firms focusing on transporting data with optics. Opportunities are arising in a few areas here. There are opportunities in the transitions between copper and optics. Various receiver technologies and such are being developed here. Optics lead to energy savings, but it requires investment first, and much higher token/second performances can be achieved. Below are a few relevant companies in this field. Applied Optoelectronics Incorporated, AAI, which is also in our portfolio, is one of the important players in this field. It's a relatively small player, but it's growing very fast. Look at the increase in value. I mean, the stock was $28 at the beginning of the year. It has now reached $159. Because investors are increasingly noticing the gaps and bottlenecks in these areas and are evaluating that the businesses of such companies will do very well. Conclusion. Of course, the rapid development of these technologies doesn't mean these companies' valuations will rise forever. Frankly, some companies have already reached high valuations. That's why it's necessary to find the relatively less priced-in companies within those main trends. These technologies are transforming very quickly. Maybe we'll start talking about new technology again in the coming days, but I believe these 5 themes of AI will drive the next 2 to 3 years, and those who make the right investments in these areas will make money. Of course, I also benefit heavily from both external sources and AI. As I use AI, I can see more opportunities. Because in the coming days, AI is heading to completely different places. AI usage is rapidly increasing all over the world, but frankly, the majority of users haven't arrived at agentic AIs or inference-heavy AIs yet. Many users still see AI as a chatbot. However, it's reached a completely different place. And as the number of people who realize this increases, the demand for AI will increase even more. I think the gaps in these fundamental themes will grow even larger. What I've explained is definitely not investment advice. You must do your own research. Which are the best investment opportunity companies here? Research it. Who knows, maybe you'll find even better opportunities than me.